Okay, we're unmuted. Max, whenever you're ready, we can get started.
Okay, good morning, everyone. I'm Max von Holweg, the Chair of the Joint Audit Committee of the New York City Municipal Water Finance Authority and the New York City Water Board. I'm happy you're all here today, and I'd like to begin by asking Deb if she could call the roll, please.
Conducting the roll call, Max von Holweg,
I'm here.
Sheldon Sasso,
Present.
Adam Freed,
Here.
James McSpirit.
Here.
Thank you as a quorum.
All right, thanks, everyone. As always, the first item on the agenda is ask for a resolution approving the minutes of our last meeting of July of this year. A draft of those minutes has been circulated for everyone's review. Anyone has any comments or questions? Now's the time to make them. Hearing none, I'd ask for a resolution.
So moved.
And a second.
Second.
Any comments or corrections? I think we had none from before. I'll call for a vote. Mr. Southwell?
Approved.
And Mr. Carney? He's not here. He can't be here today. Mr. Freed?
Approved.
Mr. McSpirit? Approved. I vote in favor. Resolution is hereby approved. The main event today is the presentation by management and the independent auditors regarding the audited financial statements of the system. I'd like to turn the meeting over to Raymond Lee, the authority's controller, who's going to present the audited financial statements and introduce the independent auditors, Grant Thornton.
Thank you, Max. So you all in front of you the financial statements for New York City Water and Sewer System for fiscal years 2025 and 2024. I'm just going to give a brief overview of the financial activity for the year, starting with the revenues. You guys a minute to get in front of you. So, starting with the revenues, this year the system saw an increase in its operating revenues of about 1.3%, or $559 million. This was largely due to the 8.5% rate increase that was in effect for the fiscal year. We also saw a reduction in bad debt expense, and that was in large part due to the tax lien sales that we had this year, the first in quite a number of years. I think it was 2019 the last time we had one for water. That caused both, the sales liens and also a lot of the outstanding bills. Folks were paying off their bills because they didn't want their property to be put into a lien sale. In terms of other revenues, non-operating revenues are pretty steady. Investment income was fairly steady. We're seeing some drops in short-term rates, but we did have more investments on hand to invest during the year, but they kind of evened out. In terms of expenses, O&M was the main item with the 10% increase, and this was largely in part to the rental payment. This was like $149 million last year, roughly, and this year was the full amount that the city could ask for, which was after truing up $276 million. In other O&M items, there was an increase in the other than personnel services, and this was due to the mandated work, rising chemical costs, and new agency programs.
I'm sorry, which category was that?
Other operating.
Other.
So if you look on page 7, the
3 lines down.
Yeah. Okay. Sorry, I was talking about the O&M. So it'd be part of the first line on the
okay.
expenses.
Great. Thanks.
And then other operating expenses went up by $25 million, and that was primarily due to increases in program expenses. Those are things like assistance programs, forgiveness programs, and then expenses related to the system's filtration avoidance termination. If we turn to page 12, this is the assets and liabilities. For the most part, pretty steady year over year. The current assets went up by $592 million, and that was primarily the increase in the receivables. While the receivable balance went up, one good thing is because of the lien sale is that the percentage of the allowance for bad debt is lower this year than it was in prior years, even though the numbers still look pretty big. So I think I did the math previously. It was 43% last year, and now about 41 or 42%. So the lien sale definitely helped in bringing down the outstanding bad debt. In terms of liabilities, primarily the biggest changes here are in our debt. This year, the authority issued $3.27 billion in bonds to the public. $1.87 billion that was new money, and $1.4 billion was used for refunding. And this year, the authority also reimbursed the city for $1.95 billion of for construction costs for the system. In terms of accounting, new accounting standards, this year there were two standards that were in effect. The first was GASB 101, which was for compensated absences. The authority did an analysis on the compensated absences and determined that the amount was immaterial, so did not record a compensated absences liability. This is consistent with previous years' compensated absences. Small staff, so we really don't have that much on books. The other standard that was in effect for this year is GASB 102, which is risk disclosures. What risk disclosures is GASB is requiring that when an entity has what they call constraints or concentrations, and constraints are which, for example, mandatory spending, or it could be regulations, or collective bargaining agreements, or concentrations, like all your revenues are from one employer and you only generate tax from them. They require that when you have those concentrations or constraints, and that an event occurs that has occurred or will occur and will cause or has caused a substantial impact, that we have to report it in the note disclosures. For this year, when we implemented it, the system determined that it did not have any events that occurred that would require disclosure. Any questions on that?
So it's a backward-looking analysis.
It
It's
is
not a forward.
both. So if an event has occurred, or management believes that it is more than likely, so more than 50%
okay.
chance of occurring within, I think the next year, then we are required to disclose it if it has a substantial impact.
Okay, so it's not a generalized analysis of risk, but rather sort of a
Yeah,
focused analysis based on what you know today.
Yeah, when GASB originally conceived this during their deliberations, it started out as disclose all your concentrations and constraints, but like commenters, preparers, like that's a bit overwhelming.
Okay.
So have to try to count for everything that could happen.
Right, so if you have one factory in town,
Yeah.
you don't have to disclose it. But if there's
Yes,
rumors,
but
things are
But
going
yeah,
to.
if there's rumors that they are going to move and you believe that it's more than likely to happen, you have to disclose it and the impact that it has.
Hard to, okay.
Right, so that's sort of the overview of the financials. Any further questions?
No questions. I'd just like to put a fine line when you talked about the reduction of bad debt. We've had a chance on the water board to hear about all the efforts that DEP has done and water board staff to reduce that. And just, it is really complex, but so appreciative of the creativity, persistence, and compassion that they brought to that to really drive it down. I think it's a nationally leading, multifaceted effort. So it's one line in a lot of financial statements, but requires a lot of manpower, work, and creativity. So just want to call out the appreciation for that for the folks here who haven't been in the weeds.
Right. Not any other questions? I'm going to turn over to our auditors, Grant Thornton. Nick, who's on the call.
Great. Good morning, everyone. Great to be with you. And we are going to go through the results of the fiscal 25 combining financial statement audit. Raymond, would you like us to bring the presentation up on the screen?
I think that would be helpful, especially for the folks on the call who may not have in front of them.
Sure, great. Christian, do you mind just bringing the presentation up? And while my colleague Christian does that, we'll start by just discussing what our responsibilities were this year. So we performed an audit of the combining financial statements of the New York City Municipal Water Finance Authority and the New York City Water Board as of and for the year ended June 30th, 2025. As part of our responsibilities, we are going to express an opinion on those combining financial statements, and we've included the draft financial statements for your review and approval. Within those financial statements is our draft opinion, which represents an unmodified or clean opinion. In addition, our responsibilities are to read the information included in the MD&A as well as the RSI and make sure it's materially consistent with the combining financial statements. If we were to have identified any instances of fraud or non-compliance, any material weaknesses or significant deficiencies, we would be required to report those findings in writing to this joint audit committee. I'm happy to report that we did not have any such findings noted during the year. Therefore, there is no internal control letter included as part of this presentation. Now I'm going to turn the presentation over to Christian, and he's going to walk you through our significant risks for the audit, as well as our areas of audit focus. And before he does that, just as a reminder to the Joint Committee, these are the items that we walked you through when we presented the audit work plan. So I'm happy to report that there were no changes with regards to the risk profile and or the results of the testing, which required us to change the approach that we walked you through at our last meeting. And so with that, Christian, please go through these in detail for the committee.
Sure. So the first
Thank you.
significant...
It's Carney and I'm on. Thank you.
The first significant risk I'll talk about is the management override of internal controls. This is a presumed fraud risk that's significant in all audits. This is not something that's specific just for the system. For this, we consider the design and implementation of controls, including information technology controls that are designed to prevent and detect fraud. We conduct interviews of individuals involved in the financial reporting process to understand if they've been requested to make unusual entries or if they're aware of any accounting misstatements. And we perform risk assessment for journal entries and detail test a sample of journal entries as part of our audit procedures. For our journal entry testing, we use a tool called Whole Ledger Analytics. This tool actually allows us to upload the entire GL for the entire fiscal year, and it analyzes based on a series of several algorithms to help us identify the high risk entries that we can test. This lets us take a very targeted approach to journal entry testing rather than selecting just a random sample. Next, I'll talk about the revenue and related receivables. So for this, we perform the reasonableness testing over revenue and receivables. We perform a detailed substantive testing of a sample of transactions across various revenue streams, and we agree all of that detailed to source documentation. We also gain an understanding of the allowance methodology related to the receivables and policies governing additional changes and charges. We also ensure that all revenues recognized in fiscal 25 were recorded in the proper period, and we also review the financial statements and make sure that all proper disclosures are included. We had no exceptions noted in our testing. Next, I'll talk about utility, plant, and service and construction costs. What we do for this is we obtain the 2025 roll forward for the system. We'll test any material capital additions, disposals, and transfers. And we also do a depreciation reasonableness test to make sure the depreciation appears reasonable for the year. For bonds and notes payable, we confirm all outstanding debt balances. We review the 2025 debt activity for reasonableness, and we assess the adequacy of all the footnote disclosures. And for expenses, we tested a sample of expenses, including those related to the lease with New York City for accuracy, recognition, and the appropriate period. And we always review the underlying support to make sure everything was recorded correctly. We also performed testing over select disbursements. For investments, we tested reasonableness and investment-related income, including unrealized appreciation, depreciation, and fair market values. And we also confirm all investment balance positions as of June 30th, 2025. We also review the adequacy of footnote disclosures related to the fair value measurement standards. Next, I'll just touch on IT. We also had our IT team assess the IT risks and related controls over the financial reporting process, and they also had no findings for the current year.
And before I go into our required communications to formally discharge our responsibilities as your external auditor, does anyone have any questions with regards to any of the areas of focus that we just covered?
Nick, can you hear us?
Yes.
Okay, thanks.
Hearing none, these are our required communications, as I mentioned, to discharge our responsibilities. So I'm going to go through each of these explicitly with you. So during the course of the audit, we did not note any going concern matters. As I previously mentioned, we did not identify any instances of fraud or non-compliance, nor did we identify any material weaknesses or significant deficiencies in internal controls over financial reporting. The use of other auditors and internal audit is not applicable for the engagement. Any related party transaction were reviewed to ensure that they were occurring at arm's length, and we did not have any issues with regards to our testing of related party transactions. We did not note any unusual transactions that occurred during the year. We certainly did not have any disagreements with management during the year. In fact, it's important for the committee to be aware that management was well prepared for the audit. We received all of the items that we needed on a timely basis, and all of our questions were answered very promptly, which further demonstrated a strong command of the books and records. We are not aware of any consultations with any other accountants, and there were no significant issues discussed with management during the course of the engagement. We did not have any difficulties encountered in performing the procedures that Christian just walked you through. And we are not aware of any other findings or matters that we would be required to disclose to you so that you could formally discharge your responsibilities as those charged with governance. As I mentioned previously as well, the opinion that we anticipate rendering is an unmodified or clean opinion. And then finally, if this information was to be included within any public document, such as an annual report or a bond offering, we review those documents in their entirety to ensure they're materially consistent with the financial statements and the opinion that we rendered. Does anyone have any questions with regards to our required communications? Okay. Hearing none, Christian, if you can go to the next slide, please. Then, I'm sorry, is there a question? Okay. The accounting policies of the system are included in Note 2 of the combining financial statements. There were no significant changes to report. Raymond mentioned the 2 new standards that were applicable this year. In addition, included within the combining financial statements are certain judgments and estimates, and we review the methodologies associated with those judgments and estimates for consistency purposes, and then we test the accuracy of the information that was then recorded into the general ledger and then ultimately transferred into the financial statements. And we did not have any issues with regards to judgments or estimates included within the combining financial statements. We also review the financial statement disclosures in detail to ensure that they are complete, accurate, and sufficient for the users of the financial statements. Happy to report that we did not have any omitted disclosures, and the disclosures are complete. There are no other matters that we would be required to disclose to you. Next slide, please. And then finally, I'd just like to conclude our presentation just speaking on the importance of auditor independence and just reaffirming to the committee that we are monitoring our independence throughout the engagement. That includes prior to beginning the engagement, during our client reacceptance process, and then throughout the engagement, our teammates on a daily basis affirm their independence in order to conduct the procedures that we are performing. And with that, that concludes our formal remarks, but happy to answer any questions anyone may have.
Nick, I'd just like to, I'm glad that you mentioned the level of cooperation and support you got from everyone involved on our side in your preparation of the audit. I think that's a credit to everyone involved. It's a lot of work, and when it goes so smoothly, you just see the surface of the ocean, but a lot of work goes underneath that, and I'm glad you took a point to mention that.
Yeah, you guys really have a fantastic team. Really, really, really strong team.
I was curious about one other thing. I had wondered whether there were any, I guess, generative AI tools that might have been used by anyone. And I was looking through the management letter, and I saw that there was actually I was kind of happy to see that there was a requirement that indicates that no such tools were used by anyone on our side in connection with financial reporting. And I wondered if that was a new requirement that you're now seeing and putting in.
Yes, that is very astute. That is a new representation this year. We are requiring it, and we are making sure that all of our clients, if they are using generative AI for any of the financial statement compilation or anything in composing the financial statements, that we understand the processes, the policies, and the procedures that are in place with regards to that. The other comment that I would make to you is certainly as part of our audit procedures, this year, we did not use any generative AI to conduct any of the audit procedures that we performed. However, it is important for the Joint Audit Committee to know that Grant Thornton has invested about $1 billion in generative AI technology in terms of developing audit tools in the future that we plan on using. Now, we have not implemented these tools yet. They're still in development, but certainly as part of future audits, if we were to anticipate using any such tools, we would certainly be reporting that to this committee ahead of the utilization of any such tools to make sure that we get your express approval. But I wanted to come full circle with that comment because you're going to see more and more of this, not only for purposes of the audits that we're doing collectively here, but with respect to your day jobs as well. You're going to see this come up a lot more.
Yeah, I think that's right. That's certainly the trend, but I don't feel that it's quite ready for prime time yet in the audit, since even if you search anything and you use an AI tool to look, there's a little footnote that says this may contain mistakes.
Agreed.
We're not quite ready yet. So, but I think it's obviously there's a lot of investment and work going on in the future. So, thanks.
Correct.
Can
Absolutely.
you build on that a little? So if Grant Thornton made a decision to introduce that to your work, we would hear it in sort of the spring meeting where we decide on the audit plans, so that we know you're, rather than a report today that you used it. I guess that's in the nature of a request, maybe perhaps a demand, that we know it's happening before
Yes.
you use it.
That is correct. So during the audit work plan presentation, we would spell out exactly what we would be using, how we would expect to use it, what risks it would be covering. And that is the meeting where you approve the audit plan. So certainly there would be no surprises. And, this would absolutely be, for the benefit of the system, for the benefit of this joint committee. And certainly, if you did not want us to utilize any such tools, we would not do that. It's just having an additional resource at your hands based upon the development that we're performing. But certainly, Mr. Chair, it is not ready for prime time. I don't expect it to be ready for prime time next year. I think this is going to take a little bit of time to develop, but it is the trend in the industry. And so I want to make sure that we are very transparent with regards to technology and our investment in it.
Right. Thank you.
Thanks.
Any further questions for Nick or the auditors? Or all right, then. In that case, the next item on the agenda is actually a resolution that would recommend to the authority's board of directors and the water board that they accept the independent auditor's report and authorize the issuance of the financial statements. The resolution would note that both the independent auditor's report and the audited financial statements may be amended to reflect non-material changes that are acceptable to the comptroller of the authority. If there are no additional comments, I'll ask for someone move that resolution.
So moved.
Second.
Thank you. I think we've had enough discussion. I guess I'd like to call for a vote. Mr. Southwell?
Approved.
Now, can Mr. Carney vote if he's not here in person?
No.
Okay. I'm sorry. But Mr. Freed,
Yeah, I approve.
Mr. McSpirit,
Approve.
and I too vote in favor. The resolution is hereby approved. Thanks, everyone. Nick.
Thank you.
The next item on the agenda is a review as a resolution that would approve our Joint Audit Committee charter. Pursuant to the charter, we're required annually to review and approve the charter. No changes are proposed. There are no comments or questions. I would ask for a motion to approve our charter. Yeah.
Why not? I'll make it a complete set.
And a second?
Second.
All right, thank you. Mr. Southwell, how do you vote?
Approve.
Mr. Freed?
Approve.
Mr. McSpirit?
Approve.
I too vote in favor. That resolution is approved. The next item is a review item. It's a review of our schedule of dates, and it provides information on the items to be discussed at the annual meetings that we have of the Joint Audit Committee. No changes in that schedule of the dates is proposed. It's in the packet that you have. This is a review item, so if there are no comments, no vote is required. And if there are no further business before the meeting, I'd like to move, someone move for a resolution to adjourn.
So move.
I'll second.
Okay.
There you go.
Mr. Southwell?
In favor.
Mr. Freed?
In favor.
Mr. McSpirit?
Approve.
I too vote in favor. We are adjourned.
Thank you.
Yep.